Liability insurance policies often include limitations based on various factors. In the instance of working on individual homes, an insurance provider might impose a limit on the value of the properties you service. This limitation is designed to manage the insurer's risk exposure. The reasoning behind it typically stems from the potential for larger claims associated with higher value properties. Insurers assess risk based on numerous variables, and the value of the property is one such variable. If a contractor performs work on a multi-million-dollar home and something goes wrong, the potential claim could be significantly higher than if the work was performed on a more modest dwelling. The insurer must then balance the premiums collected against the potential payout. Requiring you to assess property value before undertaking work can be problematic. You are not a qualified appraiser and lack the expertise to determine the true market value. Therefore, a compromise such as providing your best estimate is a reasonable approach, but it's important to document your process for making the estimate. This documentation may be important to demonstrate your due diligence in the event of a future claim. When insurers review income statements, they scrutinize all sources of income to assess the nature of your business activities. Another income item, like website development, may raise concerns because it falls outside your primary line of work. Insurance policies are typically tailored to specific business operations. If you engage in activities outside the scope of your primary business, the insurer may deem it necessary to reassess your risk profile. This could potentially lead to a rate adjustment or, in more extreme cases, cancellation of your policy. An insurer's decision to cancel a policy due to outside income might seem drastic. However, it's important to understand that insurance policies are based on an assessment of risk. If your business activities expand beyond the scope of the original policy, the insurer might feel that the existing policy no longer accurately reflects the risk they are undertaking. Insurance companies must adhere to specific regulations and guidelines that vary by state. These regulations impact the types of coverage they offer, the rates they charge, and the reasons they can cancel a policy. In some jurisdictions, insurers have broad discretion in cancelling policies, while in others, the grounds for cancellation are more limited. If an insurance company decides to cancel your policy, they are generally required to provide you with written notice. This notice should specify the reasons for the cancellation and the effective date. The timeframe for this notice varies by state law, but it is usually 30 days or more. When faced with insurance policy issues, it's always a good idea to explore alternative insurance options. Firstly, you need to research and identify reputable insurance companies that operate in your area and cater to your specific business needs. Secondly, you should obtain quotes from multiple insurers to compare coverage options and premiums. Thirdly, you should carefully review the terms and conditions of each policy before making a decision. It's essential to work with an insurance agent or broker who can provide expert advice and guidance. They can help you understand the intricacies of insurance policies and ensure that you obtain the right coverage for your business. Look for agents who have experience working with businesses in your industry. Insurance policies typically include various clauses that define the scope of coverage, exclusions, and conditions. Common clauses include the named insurer clause, which specifies who is covered by the policy, the coverage clause, which describes the types of losses that are covered, the exclusions clause, which lists the specific events or circumstances that are not covered, and the conditions clause, which outlines the responsibilities of the insured in the event of a claim. Insurance policies often include a deductible, which is the amount you must pay out of pocket before the insurance company starts paying for a claim. The deductible can affect your premium, with higher deductibles generally resulting in lower premiums. Choosing the right deductible depends on your risk tolerance and financial situation. Liability insurance is designed to protect you from financial losses if you are found liable for causing injury or damage to someone else. It covers the costs of legal defense, settlements, and judgments up to the policy limit. There are different types of liability insurance, including general liability insurance, professional liability insurance, also known as errors and omissions insurance, and product liability insurance. An insurance policy's coverage limit is the maximum amount the insurer will pay for a covered loss. It's important to choose a coverage limit that is adequate to protect your assets and business. Factors to consider when determining the appropriate coverage limit include the size and nature of your business, the potential risks you face, and the amount of assets you need to protect. An insurance premium is the amount you pay to the insurance company for coverage. Premiums are typically paid on a monthly or annual basis. The premium is determined by various factors, including the type of coverage, the coverage limit, the deductible, and the risk profile of your business. Insurance companies use a process called underwriting to assess the risk associated with insuring a particular business. Underwriting involves evaluating factors such as the business's industry, location, financial stability, and claims history. The underwriter uses this information to determine whether to offer coverage and, if so, at what premium. When shopping for insurance, it's important to compare quotes from multiple insurers. Don't just focus on the premium. Carefully review the coverage options and policy terms to ensure that you are getting the right coverage for your needs. An insurance agent or broker can help you navigate the complexities of insurance policies and find the best coverage at a competitive price. It's important to maintain open communication with your insurance agent and keep them informed of any changes in your business operations. This will help ensure that your policy remains up to date and that you are adequately covered. If you experience a loss that you believe is covered by your insurance policy, it's important to file a claim promptly. Follow the insurance company's claims procedures and provide all the necessary documentation. The insurance company will investigate the claim and determine whether it is covered under the policy. If your insurance claim is denied, you have the right to appeal the decision. The appeals process typically involves submitting additional information and documentation to support your claim. You may also have the option of seeking mediation or arbitration to resolve the dispute. Insurance regulations and laws vary by state. It's important to understand the specific regulations in your jurisdiction. State insurance departments oversee the insurance industry and can provide information and assistance to consumers. Common types of business insurance include property insurance, which covers damage to your business property, workers' compensation insurance, which covers medical expenses and lost wages for employees injured on the job, commercial auto insurance, which covers vehicles used for business purposes, and cyber liability insurance, which covers losses resulting from data breaches and cyber attacks. Business interruption insurance can help cover lost income and expenses if your business is temporarily shut down due to a covered event, such as a fire or natural disaster. Errors and omissions insurance E&O protects professionals from liability claims arising from mistakes or negligence in their professional services. Directors and officers insurance D&O protects the directors and officers of a company from liability claims arising from their management decisions. Key person insurance provides financial protection to a business in the event of the death or disability of a key employee. Risk management is the process of identifying, assessing, and mitigating risks that could impact your business. It involves developing strategies to prevent or minimize potential losses. Insurance is an important part of risk management, but it's not the only tool. Other risk management strategies include implementing safety procedures, providing employee training, and maintaining adequate security measures. A business continuity plan outlines how your business will continue to operate in the event of a disruption, such as a natural disaster, power outage, or cyber attack. It includes procedures for backing up data, relocating operations, and communicating with customers and employees. Insurance fraud is a serious crime that can have significant consequences. It involves intentionally deceiving an insurance company to obtain benefits to which you are not entitled. Examples of insurance fraud include filing false claims, misrepresenting the nature of a loss, and inflating the amount of damages. Understanding insurance policies and managing risk are essential for protecting your business. By carefully evaluating your insurance needs, working with a knowledgeable agent, and implementing effective risk management strategies, you can minimize your exposure to potential losses and ensure the long-term success of your business. When dealing with an insurance company, it is imperative to maintain meticulous records of all communications, policy documents, and claim-related information. These records can serve as valuable evidence in the event of a dispute or disagreement. If you encounter difficulties with your insurance company, you have several avenues for recourse. You can file a complaint with your state's insurance department, which will investigate the matter and attempt to mediate a resolution. Alternatively, you can pursue legal action against the insurance company if you believe they have acted in bad faith or violated the terms of your policy. The burden of proof typically rests on the insured to demonstrate that a loss is covered under the policy. Therefore, it is crucial to gather and preserve all relevant documentation and evidence to support your claim. Insurance companies often employ adjusters to investigate claims and determine the extent of the damages. It is important to cooperate with the adjuster and provide them with all the information they need. However, you also have the right to represent your own interests and negotiate a fair settlement. Insurance policies are legal contracts, and their interpretation can be complex. If you are unsure about the meaning of a particular clause or provision, it is advisable to seek legal advice from an attorney who specializes in insurance law. Insurance companies are required to act in good faith when handling claims. This means they must investigate claims promptly and fairly, and they must not unreasonably deny or delay payment. If you believe that your insurance company has acted in bad faith, you may have grounds for a lawsuit. The measure of damages in an insurance case can vary depending on the circumstances. In some cases, you may be entitled to recover the actual amount of your losses. In other cases, you may be entitled to recover additional damages, such as punitive damages, if the insurance company acted maliciously or fraudulently. Insurance law is a complex and ever-evolving field. It is important to stay informed of the latest developments and to seek professional advice when needed. By understanding your rights and responsibilities, you can protect yourself and your business from potential losses. Remember that insurance is a tool to mitigate risk, not eliminate it. It's crucial to implement a comprehensive risk management plan that addresses all potential hazards. Regularly review your insurance policies to ensure that they adequately cover your current needs. As your business grows and changes, your insurance needs may also change. Consult with your insurance agent to make sure your policies remain up to date. Don't be afraid to ask questions and seek clarification on any aspect of your insurance coverage. A knowledgeable agent should be able to explain your policy in plain language and address any concerns you may have.